of not-for-profit organizations. Learning objectives. At the end of this module, you will be able to identify the meaning of not-for-profit organizations, recognize the characteristics of not-for-profit organizations, learn about the various accounting records maintained by not-for-profit organizations. Organizations generally operate for one of two reasons. The motive of the organization may be either to earn profit or to provide services to the members or to society. Services provided to society include education, healthcare, recreation, sports, promoting art and culture, and so forth. The organizations whose motive is to provide services to the society are known as non-profit organizations or not-for-profit organizations. This is because these organizations provide services either completely free or at a nominal cost. Let us understand this with the example of Sunrise Sports Club, which was started by a group of 4 retired people. These people can be called trustees. 3 of them were sports lovers, and 1 of them was a businessman. The trustees contributed some money to form and build the club for the welfare of society at large. The club enrolls members by taking nominal membership fees from them. The club is managed by the managing committee, elected by the trustees and members. The managing committee looks after the planning, organising, and all other tasks related to the club. The club welcomes young talent to use their services and do not charge any fees from them. The prime objective of the club is to serve society and its members. Apart from the contributions from the trustees and membership fees, the other sources of income to the society include entrance fees, grants from the government, donations from interested citizens and organizations, legacies as per the will of deceased persons, income from investments, and so forth. These funds collected by the club are credited to a capital fund or general fund. This fund is utilized to purchase land and buildings, a sports ground, sports equipment, and for maintenance of the club. The surplus of its income over expenditure is credited to a capital fund. This is so because the club is a not-for-profit organization. As such, neither the trustees nor members can withdraw funds of the organization. The managing committee is required to manage the funds of the club properly and has to maintain accounts accordingly. These accounts are made available to the members, trustees, and statutory bodies, such as the Registrar of Societies, under which they are registered. So, the maintenance of accounts by such not-for-profit organizations is compulsory in order to meet the statutory norms. All not-for-profit organizations work in more or less the same way. Having learnt about the meaning and characteristics of not-for-profit organizations, we will move ahead and look at the various accounting records, which are usually maintained by them. Continuing with the case of the Sunrise Club, you have observed that the club does not produce or exchange any goods. However, it does provide service to society. Therefore, the trading account is not prepared by not-for-profit organizations. Further, you have observed that the objective of the club is not to earn profit. Therefore, they do not open the profit and loss account either. However, it is mandatory by law for all not-for-profit organizations to maintain accounts. Proper accounting records help to control the utilization of funds and will highlight any misappropriation of funds. Let us now see the various accounting records that are usually maintained by not-for-profit organizations. One of the important features of a not-for-profit organization is that most of their transactions are on cash or bank, not credit. As a result of this, the organizations are required to maintain a cash book, which contains the receipts and payments of cash transactions. Further, they also maintain a ledger of various assets, expenses, income, and liabilities. For example, the Sunrise Club has to maintain a ledger of its land, buildings, other sports equipment, capital funds, subscriptions, donations, and so forth. They are also required to keep a record of their stock, like sports equipment, stationery, and fixed assets. All these records, cash book, ledgers, stock registers, and so forth, help the organizations to prepare their financial statements. They have to follow all the accounting policies and principles during the preparation of accounting records and financial statements. Generally, they will maintain their records using the double entry system. Further, a trial balance is required to check the accuracy of the ledger accounts and to facilitate in the preparation of financial statements. All not-for-profit organizations take the cash book and trial balance as the base document in the preparation of their financial statements. The financial statements are normally prepared at the end of the financial or accounting year. The financial statements of these organizations include 1. Receipt and payment account, 2. Income and expenditure account, and 3. Balance sheet. Let us see each of these 3 financial statements. The receipt and payment account is a ledger account and includes all cash receipts and cash payments which occur during the financial year. For instance, the Sunrise Club enter all cash receipts like member subscriptions, legacies, donations, grants, receipts from investments, sale of old newspapers and old sports equipment, and so forth, in this account. Further, the cash payments for purchase of land, buildings, sports equipment, stationery, and all other such payments are entered into this account too. This is maintained by taking inputs from other ledgers or from the cash book. Secondly, an income and expenditure account is maintained. This is similar to a profit and loss account prepared by profit organizations. This account contains the details of all income earned during the period, along with the expenses incurred during the period. The incomes of the period include all cash receipts, with adjustments of accrued income and income received in advance. Similarly, the expenses include all cash payments, with adjustments of outstanding expenses and prepaid expenses. The account also includes certain other expenses, like depreciation of assets and so forth. The surplus of income over expenditure is transferred to the capital fund in the balance sheet. Every not-for-profit organization prepares the balance sheet in order to know the financial position of the organization. The balance sheet is the summary of all assets, liabilities, and the capital fund of the organization. This balance sheet is again similar to that of the balance sheet of any profit organization. So, you have observed that the accounts maintained by not-for-profit organizations are little different from those of profit organizations. One of the reasons for the difference in the accounts of these organizations is due to the fact that all the not-for-profit organizations provide services to the society and members either completely free or at a nominal cost, whereas the profit organizations operate to earn profit. The accounting information is published in these financial statements and helps the trustees, members, donors, and statutory bodies to evaluate the performance and to understand whether the income generated by them is sufficient to meet expenses.